What would happen if an investor made a one-time purchase into JEPQ or the JP Morgan Nasdaq Equity Premium Income ETF, say $200,000 into an ETF that not only offers over a 12% 30-day SEC yield, but also an ETF that has grown a little bit over time as far as capital appreciation too? And beyond that, what would happen if an investor bought a bunch of JEPQ and then reinvested those dividends into more shares of JEPQ over the years? Well, if you want to know all the answers to that and more, stay tuned, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now first, let's back up for a second. Why in the world would someone want to buy into JEPQ in the first place? Well, this ETF is personally in my portfolio. I think it's absolutely awesome. It offers monthly distributable income and exposure to the NASDAQ 100, but with less volatility because of the option overlay. Now, speaking of the option overlay, this ETF's portfolio is made up of an underlying equity portfolio that employs an applied data science approach to fundamental research and portfolio construction, but then with that disciplined option overlay implements written out of the money NASDAQ 100 index call options that seeks to generate distributable monthly income. So for investors like myself that do want exposure to the NASDAQ 100 because of what it has to offer, the implied volatility is pretty high names in here. That high implied volatility is going to offer a lot of income potential, at least potentially, but also with less volatility because of the option overlay. Now, how much income potential is JEPQ actually going to give you? Well, it really depends on how much implied volatility is going on in the market at any given time. So generally speaking, during times of lower volatility, option premiums are going to be cheaper, which means that JEPQ might not be able to distribute as high amounts of income, but for the most part, we're looking at an average of around 45 to 50 cents, depending on whichever month we're looking at. Now, because JEPQ currently costs around $50 per share, that means that you're getting paid back 1% of your overall investment every single month, which is honestly not bad whatsoever. The next thing you're probably asking me is, well, how is JEPQ done long term if you take into consideration all the growth and the dividends over time? Just as of recently, before the most recent drop, JEPQ was absolutely crushing it. The ETF was growing nicely and paying investors like myself very handsomely every single month. Now, just as of recently, during the entire market crash, correction, whatever you want to call it, JEPQ is now only offered a total return on the max time frame of 32%. Now, this is still an average return of around 11% since inception, which is not bad whatsoever. So for investors that are seeking more income, JEPQ, at least based off of the previous performance, has definitely supplied what us investors are looking for. Not to mention, if you take my portfolio, for example, I've owned several hundreds of shares of JEPQ for basically as long as this ETF has been trading. I started buying back during inception date. You have to keep in mind that over the years, I use these dividends to not only buy more shares of JEPQ month after month after month, but also I bought other names to really build out my portfolio, which has been a massive help. Now, just going over some basic math, as of right now, because JEPQ is currently around $50 per share, a $200,000 investment into this ETF, which is large, don't get me wrong, but it's not the largest investment in the context to retire or something. $200,000 would buy you around 4,000 JEPQ. Now, based off the most recent dividend payout of 54 cents per share per month, that means that an investor that invested around $200,000 into this ETF would receive around $2,160 per month in dividends. Now, again, this is going to depend on how much JEPQ pays out. One month could be a massive payout, the next month not so much. And honestly, as a holder of an ETF like this one that doesn't necessarily have a targeted distribution rate, it can get a little bit frustrating because one month might be massive and you feel like you're on top of the world, you have a ton of extra income, and then the next month might be 10 cents lower per share, which again, if you have 100 or 200 or 1,000 shares, that definitely can change things around a little bit. But for the most part, if you average out the highs and lows, like I said, it still is offering a nice healthy yield. So now that we talked about what JEPQ has to offer, how the ETF works generally speaking, I even share with you guys how much in starting dividend income you could receive by investing around $200,000 into an ETF like this one. If we were to invest $200,000 into JEPQ, which currently offers a trailing 12-month dividend yield of around 11%, an expected annual dividend amount increase of 0%, an expected annual share price appreciation of around 4%, 30 years invested, Dividends are going to be reinvested for this example, but again, this is just an example. Play around with some of these free dividend calculators on your own. They're a ton of fun. Now, based off the $200,000 investment into JEPQ, reinvesting the dividends and not contributing another single penny from there. Just reinvesting the dividends and letting the portfolio compound on its own. It looks like right off the bat, a $200,000 investment is going to pay you around $23,000 per year in dividends, which is massive compared to like VIG or even SHD, which is why partially some investors, including myself, love ETFs like this one. Now, by year number 2, after the slight increase in price and those dividends being reinvested, by year number 2, you're already up to over $25,000 per year in dividends. Now, this is also why a lot of investors use ETFs like this one during times of retirement, because they do have the potential to pay you so much cash flow, which is going to help, especially if you stop working. Now, by 5 years down the road, your portfolio, again, just starting off with $200,000 invested, will be worth well over $300K in theory, and paying you north of $32,000, $33,000 per year in dividends. Now, after around 10 or so years, the portfolio would already compound to well over $500,000. And by this point, $45,000 per year in dividends isn't necessarily enough, at least, to retire, but it's definitely getting up there. And by 15 years down the road, $933,000 and over $61,000 per year in dividends. Now, just as a side note, if you were to invest $200,000 into something like VIG or even SHD, which offer massive growth and massive dividend growth potentially, your dividend calculator is going to look a lot different. So again, check out some of my other videos because I go through tons of names on my channel. But again, just for JEPQ, an ETF that offers basically no dividend growth, small amount of growth, but a ton of dividend income, you can still compound a relatively small portfolio into north of $1 million invested just after around 15 or so years. Now, after around 20 or so years, just based off of the previous data, again, things can change, dividends can increase, decrease, etc. We're at almost $1.5 million and over $77,000 per year in dividends. Now, 30 years down the road, if you invested just $200K into JEPQ and then let the portfolio compound on its own, year after year after year, we're talking over $3 million invested now altogether and over $110,000 per year in dividends. So again, why is this ETF worth looking into? Why is this ETF so popular? Once again, because it offers NASDAQ 100 exposure, but with the strategy that it uses, it offers a ton of income generation basically from day one. I mean, like I said, for every single share that you buy at JEPQ, you're looking at around 40 to 50 plus cents per share per month that following month, as long as you buy before ex-dividend date. All to say that this ETF is still in my portfolio as of today, especially where it's been trading as of recently. I've been nibbling on some more shares, adding more and more shares in my portfolio. Now, before I go, I do have one last question for you guys down below. Do you currently own any shares of JEPQ in your portfolios? Let me know yes, and if not, what other ETFs do you own that are similar to this one? If you guys enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.